S Naren, good morning. Thank you for joining us. The budget is over, but Corona is something which we need to take stock of. On that front, are you worried?
See, basically we were post the coronavirus sad event. We've been talking to people. Effectively, what we heard is these viruses, by the time summer arrives, they all die. So, frankly, the question is, when do they peak? And that's the sad discussions we are having. So obviously they are a source of near-term worry, and source of near-term volatility. But given that the country has past experiences of dealing with SARS, our view is that these would eventually get handled. How long the correction lasts due to coronavirus is the question. And so it doesn't change from an investor point of view. It does change based on a trader point of view. That's how we look at it. Of course, it's a sad event, but nevertheless, I think it doesn't change the investment point of view in any way.
Naren, let's talk about what transpired on Saturday. What would you blame the market fall on? Were we just aligning with the globe because of the coronavirus scare, or was it a budget impact?
See, I think no. In India, we all have this hangover of the 90s. In 90s when we started 90s, we used to have very high tax rates, and every budget was an opportunity for tax rates to come down. So it was as though in every budget you could get some manna from heaven kind of approach. So every budget was an opportunity for everyone to be happy, because either customs duty came down, income tax came down, capital gains tax came down, everything came down. But that phase is over. And today it is, if you compare India with most of the Western countries and don't compare with Dubai or Singapore, you'll find that the rates are not higher than any of those countries. So, and you also have to remember that India got a big benefit in September through a big drop in tax rates for corporate India. So I think expectations in India always run high ahead of budget. And if you look at Indian markets, always between January and March, there have been corrections in most of the years. And so I believe it's part of the always the extra expectation from a budget, as though the government has huge leeway to keep giving tax concessions. If you open newspapers pre-budget, you'll find that there is no mention of anything that is put as additional tax. It only talks about concessions, as though the government, with the kind of finances it has a lot of capability to keep giving only concessions without any taxation.
Why did market fall the way they fell? I mean, 1,000-point fall is not a joke. I mean, it cannot happen because if budget was almost like a no news and they've done nothing to change or shake things up, the market reaction on Saturday was slightly nervous.
I think Saturday is a problem also. If you look at it, on Saturday, you don't have foreign institutional investors are not there. Most of the insurance companies are not there. So I think in a sense what happens is you have very limited institutional participation. You can't have, most of the other country markets are not open. So many of the arbitrageurs also cannot operate. So I think all those also play a role. I would actually request the government not to announce budgets on Saturdays, because there's a very planned event. So why can't we have it on a weekday? Because end of the day, it is clear that we need both the insurance companies and the global markets to be open on a day when we are announcing the budget. And I believe that is a problem, clearly, from a market point of view, to have a budget on a Saturday. Although it does give us more time to look at the budget on a Sunday, but nevertheless, I believe that it's useful to have a budget on a weekday.
Absolutely with you, Naren, on that one. Budgets shouldn't be on Saturday because it's a working Sunday for us as well. And I think our puffy eyes are a telltale sign as to how the
Puffy
weekend
eyes,
went.
where?
No? I can see your puffy eyes.
I'm aging. Okay. Naren, when markets got DDT, when DDT was there, everyone said, remove DDT, it's going to be a big reform. Now that DDT has gone to the hand of receiver, everyone is saying that, oh, HNIs will have to pay more tax. I don't know how to look at it.
Actually, that's a challenge at this point of time if you look at it, because when DDT was introduced, it was introduced in an era without dematerialization. It was introduced in a period where actually paying taxes on dividends could be avoided by a large part of the investors. Today, everything is dematerialized. The whole TDS provisions are much tighter than they existed in the 90s. So I think it's much better and much more equitable when you do it through the current new model. And having said that, obviously the persons who are at the higher tax bracket tend to lose with the new system. And the person who is in the very low tax bracket or the 0% tax bracket are going to be gainers in the system. So obviously, any tax or any concession, there will be people who will gain and there will be people who lose. So I think it's part of the deal. So obviously, a system like DDT leads to a situation where the loser is the person who is in the 43% and 38% tax bracket. And the gainer is the person in the 0% tax bracket. And I believe that most of the people whom you interview in the channel are all people in the either in the 38% or 43% tax bracket and not in the 0% tax bracket. So you're not going to get any positive view. In fact, most of the people in the 0% tax bracket won't even know about what is DDT. So that's why I think that's the challenge about a budget. So, how do people understand? So, this entire debate of what is the tax saving for the people in the 5 lakh to 15 lakh thing. I believe that most of the people that we deal with at least know what is Section 80C, what is 80D, 80G. But I think there's a lot of challenged people who don't even know everything about income tax, who possibly even save and then they don't claim because they don't know about everything. Today for them to pay lower tax is very beneficial. So I think, for them this new system is beneficial, but for a lot of educated young individuals, the concessions that were announced on Saturday were not beneficial at all because they were anyway capable of making use of 80C, 80D, 80G and all these other concessions. So that's how India is made up of all kinds of people. India is not made up of only the top 1 crore or top 10 crore people. It's made up of 130 crore people. And that's something we find it difficult to understand. So I think it's a challenge actually. That's where the government challenge becomes very difficult. And that's why I think the government's challenge has to be somehow create growth. And that as long as growth happens, then the top 10 crore people will become top 20 crore people. And then whatever policy that is created will benefit a larger number of people if they were to help, instead of, if it were to help the top 10 crore people, it would help the top 20 crore people then.
Okay, just 1 second or actually less than that, the market opening. And Naren, stay with us. We would want you to react to the first rates as well this Monday morning. Let's see if it's a continuation of the trend that you saw on Saturday, or for that matter, what the SGX Nifty is indicating, although that's a little faulty considering Saturday, remember, the Singapore Nifty was not trading. So it seems like finally after that big fall on Saturday, some stability and semblance is returning to the screen. We've started off absolutely flat. The Bank Nifty, which fell pretty hard on Saturday is also seeing some flattish moves. So at least the fall gets arrested, and that I would say is a good sign after that kind of fall that you had on Saturday. I want to quickly check in on the sectoral indexes, and I can see that Infosys, TCS, all those beneficiaries from the DDT abolishment are actually holding up. But I want to see the banks because they were the ones which took it on the chin in Friday's session. So be it an SBI, which had a 5% fall of that matter, even an HDFC Bank, which fell pretty hard, and ICICI Bank as well. Those slight red ticks on some of the banking names continue. While ICICI Bank recovers about 1%, HDFC Bank has started off with a red tick. Autos would also be reacting to their monthly sales data. Slight bit of recovery is what you've seen. At least that is what the month-on-month data seems to be indicating. So about a 0.5% uptick coming in from Maruti. I want to check in on Tata Motors, which of course lost a fair bit after its earnings as well were reported last week. Bajaj Auto sees a big rebound. Again, after its earnings, this one has seen a very smart follow-through in terms of gains. M&M as well starts off pretty flattish as we speak right now. What's happening in insurance stocks? Is the fall there after Saturday's budget impact getting arrested? HDFC Life, 0.2% gain there, 563 thereabout is where that is. SBI Life recovers about 2%, 911 on that stock. Nippon Life continues to suffer though. So not bad, I would say, Nikunj. At least you're starting off on a quiet, flat note. I don't know whether this is going to get worse towards the latter part of today's trading session, but at least the first start is a decent one.
Let's see when institutional investors, they step in, and frankly, you can always look at the most important theme for us is that we are still dependent on global flows. And globally, if at all, for institutional investors, post what's come on DDT, I think they should be happy and excited. For them, it's like great news. Sovereign funds coming to India, again, great news. Now, we can talk about some HNI crowd feeling the heat of DDT because they'll have to pay 35 or 42% tax, but that's like 1,000 people, 1,500 people, less than 10,000. Those are opinion makers, I agree. But markets is beyond those 10, 15,000 people. I'm using very harsh words here to simplify something because on Twitter, that's what we are hearing in last 2 days. That's what, they've been calling me and saying, oh, you will have to pay more taxes. But remember, folks, markets are beyond 10,000, 15,000 people, beyond just 15, 20,000 promoters and how much tax they will have to pay. Naren, let's talk about the re-rating and the de-rating. The re-rating has happened for, some would argue, Naren, stocks which have high dividend yield after the change in DDT, and de-rating has happened in insurance and especially life insurance companies where the exemptions will go away. Would you agree with my view that there is scope for good old high dividend paying companies, IT, metals to get re-rated, and insurance will get de-rated because of change in norm and LIC IPO?
No, I personally think that insurance is not being taken just because people want to save tax. I don't think that is the reason. I think there is a fair amount of protection, and I don't think Section 80C is the prime reason for people taking insurance policies. I think there is a certain amount of overcorrection that has happened on Saturday. If that was the reason for the fall of insurance companies, I think clearly against where we were on Friday, we would be more positive on insurance as a theme compared to where we were on Friday. And as far as dividend yield is concerned, frankly, we have been positive on the theme even 3 months back. It was part of our entire view that value and dividend yield and special situations are more interesting ways to invest than quality and mega caps. I continue to think that that is a trend which is going to play over the course of the next 3 to 5 years, because the valuation gap between these have increased significantly, and I think again the DDT angle is likely to play a role, along with introduction of Section 80M, which allows for dividend set-off. So I believe that clearly dividend yield, value and special situation investing are 3 different ways of investing at this point of time, and each has potential at this point of time for investing, in my opinion. Whereas quality and mega caps do look overvalued relative to the market at this point of time. That's how we look at it. Will these trends play out in 1 month or 2 months? I do not know, but I think they will play out over the next 3 to 5 years.
Naren, all of us were hoping for a recovery, maybe a mild recovery, but a recovery nevertheless. The green shoots for auto sales have bottomed out. The other green shoot was that steel prices in the last 3 or 4 months have gone higher. Inventory level had started, inventories have also come down is what I understand across sectors. But given the coronavirus issue and globally if there is going to be a bit of a slowdown and assumptions will get rebooted, the recovery which we were hoping for, will that largely get more prolonged because of global factors? And instead of a bottom formation which ideally should have happened in this quarter, will it move to the second half of this calendar year?
Actually, if you look at what has happened to oil, it's very positive for India. Oil has come to $55. That gives you much more monetary policy space compared to 2 months back. So I believe, India has enough positives at this point of time. I think the missing answer, which I don't seem to have an answer, is there is a huge surplus sitting with banks at this point of time. And maybe it's with the public sector banks running into lakhs of crores at this point of time. Why? What is preventing them from lending? Why is there no credit demand at this point of time? That's a question I think you should ask banks at this point of time, because I believe that if credit growth is going to be so anemic at 6-7%, I think that is a challenge at this point of time, because you don't have economic recoveries at 6 to 7% credit growth. You would have it when they go back to double digit. So I believe that's the question for which I don't have an answer. I believe the entire global environment where oil comes down, there is huge monetary policy space again getting created with potato, onion and tomato price coming down. I think we are in a very, very good position for again a monetary policy benefit. So all that is positive. But somehow there is a lack of risk appetite in taking risk. As a mutual fund, we believe there is huge scope for investing in good, moderate risk accrual products. And we've been recommending to all investors to invest with us in these products. And we see huge opportunity for us to deliver good risk-adjusted returns to many of the investors in these products. But we would want to hear from the banks as to why they are not being able to increase credit growth in this kind of environment. Because corporates are borrowing 3-month money at 5% today. The top corporates in India, that is really cheap, but it's very critical that you're able to increase credit growth. And that, I think, is the biggest problem in the economy today.
Right. Thanks so much for joining us this morning, Naren. Interesting to get your views, and we're going to also contrast them with Navneet's views, who's joining us also in just a moment now.